morning. Welcome to Rick's Market View with Hit-and-Run Candlesticks. This is Rick. Friday, the SPY had a chance to really fall apart here, gapping down and pushing to a lower low opposed to Thursday's or Wednesday's lows. The bulls took it back up through its open, closed it up over the 200 weekly moving average, and closed it up over our moving trend line, the T line, and closed just slightly below the 20-day simple moving average. This holds true with most of the indices such as IWM, the Qs, and the diamonds. Today, I would look for further strength to the upside. I think this is a very good sign here, a very good candlestick coming off of a double bottom. Right now, I do see a little more strength up. I think it's going to be very important that we clear this 121.20 area right here. Extremely important. If we cannot get out of this and we stay inside our little box here, that just keeps us in a bit of a chop zone. So we really need to break out of this area. We break out of this area, then we're looking for something up near the 126 50-day moving average, and then maybe we move up into the 200-day moving average of about 128.60 up in here. So the first thing we need to do is get out of this box. Okay, today we've got I'm going to go through a few charts. We have about 10 charts on our stock pick list, and then we will call out charts as they show up in the live trading room. But I'm going to highlight four of them today, that four that are on our pick list. Real quick, MITK. And by the way, there is a tremendous amount of bullish engulfs out there if you haven't noticed. And I would take note of some of these bullish engulfs. MITK is one of them. We're trading in a nice trend up. It's pulled back down here, came back up, pulled back again, and it seems to be holding the 50-day moving average with a bullish engulf Friday after three little dojis and a big dark candle down. This is making what we would call a cradle pattern, and the bullish engulf has come up over the 50, the 34, and the 20-day moving average, closed up very nice. It becomes a simple play. We just want to put a line up here to give you kind of a guideline. You see what it needs to do. It needs to break out and get going above about this $9 range. We would be looking at targets up, first swing targets up into here, and then swing targets up into this area, and then possibly further. The next one we have on our list is TGB. TGB had a fantastic day Friday, closing with a bullish engulf, opened up just slightly lower than the previous Thursday's little doji, came all the way up to the 34 exponential moving average and backed off a little bit. Wouldn't be afraid to trade this on strength, nor would I be able to be afraid to trade this on anything to the right. A little bit of consolidation here. That's TGB. Another one we have is ANW. ANW put in a very nice chart pattern. We call this our pinball setup, where it's in a downtrend. We have a bottom, it's up, back down, and up. Over the T-line is the key. We have a low, we have a high, we have a higher low, and now we're working to make a higher high. The pinball setup is when we have a move up over the T-line with confirmation. That's what we have right now. That's also what we have over here that failed. With this move, and in this pinball setup, we have a little doji and a bullish engulf right here over the T-line. So we're looking for this one to show some strength and to hold up over the T-line area, come up maybe up through the 34, through the 50, and then you possibly have the 200-day moving average as a target down the road. Certainly not the next couple of days, but it would make a great swing trade up to that 200-day moving average. And the last one that we're going to highlight here on the morning video is AMD. AMD had a double bottom right here. Nice little double bottom. Came right up through the T-line, consolidated, little inverted hammer, and a bullish engulf right here. Closed just under the 34 exponential. Wouldn't be afraid to trade this up using our T-line as our guideline. You want that T-line to stay underneath the candles, or the candles to stay on top of the T-line. T-line will act as support. Just come up and bounce on it, bounce on the T-line, and making newer highs. That's what we're looking for. Again, thanks for watching our video. This is Rick with Hit and Run Candlesticks. Hope to see you in the trading room today. Thank you.